Yo, what's up, guys? Another video. RJ here from Steady Trades. Want to go over 200 moving averages today with you guys, and just sort of some context around how I use them, how a lot of market participants will use 200 moving averages, and I'll show you how the market reacts to them and stuff. And so maybe you can add some context to your trading, um, especially using the higher time frames and stuff. I think it's where it's makes more sense to use these as opposed to much lower time frames for scalping and stuff. Although they're useful on many time frames, I want to go over kind of how I use them and the context behind them. So on my chart, you'll see a yellow line and a white line. One is the 200 simple moving average, which is the yellow line, and then the white one is the 200 exponential moving average, or EMA, right? And so how I like using these is just for overall market context, and you can see that they provide extremely tough support and resistance. If you look at the months prior, we're on a daily chart right now, as you can see up top. So obviously each one of these candles is a direct representation of one day. We can see we have not been trading above or at the 200 EMAs since about April, right? We can see that right here. We were above and, kind of chopping in between. And then obviously the market sells off and we've been at these levels down here way beneath 200 moving averages for some time. So with these things on my chart, and when we started to make a bullish move back up towards these 200 EMAs, this day here in particular, which was August 8th, I knew that we were in a tough area of resistance, right? If we look left, we see a significant area of support, or resistance rather. If you're not familiar with support and resistance, we'll link a video down below that will teach you how to chart support and resistance. So we can see a tough area of resistance right here. And I knew if we could get through this, we would test the 200 EMA and more than likely reject it that day. So it was a risk I was willing to take. I don't typically trade reversals, but knowing the context of the 200 EMA, adding in that we have not been above the 200 EMA since April, nor have we even tested the 200 EMA one single time since that time frame, it gave me quite a bit of confidence to go short the moment we hit that day. Made a pretty nice return that day. And then if you see the next day, we gap up over that 200 EMA and then test it and bounce, right? These are great day trades if you're timing them right. If you're aware of where the price is, if you set an alert at this price level and wait for price to hit that exact EMA price and then play the reversal, you get phenomenal gains out of it. And then we have the simple moving average that is, also widely used. We can do a video on a difference of EMAs and SMA. Actually, I think we already have one. But nonetheless, it's a very popular moving average as well. And if you look at the current market conditions and how things have reversed as of late, currently it's August 24th, I believe. Yeah. The market went and touched the simple moving average, the 200 simple moving average, and we have reversed off of that. And then we gap down beneath it, right? And now we're starting to try to, build back today. So 200 moving averages can prove to be very powerful in your trading strategy, especially if you're in a trade and you're coming into an area like that. It's probably a good position to scale out. I'll show you guys also how I use it in conjunction with day trading. So today, I took a SPY trade on a breakout here. So we break out, I'm long, we're playing daily contracts. They obviously pay phenomenally well. We move right to the first 200 EMA, which is the simple moving average. You can see how it respects it and then gets through it. And then ultimately I did scale out of most of my position as we approached the 200 EMA. And then once I saw it start to break down a little bit, I sold my runner at break even and got out of the trade. Now, the way I would normally trade is I would take profit probably at the highs from yesterday. We're on a 5-minute time frame right now, so I would probably take my most of my profit at the highs of yesterday. And you can see we didn't quite get there. We got close, but we didn't quite get there. But we got pretty close to the 200 EMA, right? Also, adding the context of the fact that we broke through the 200 simple moving average. I know in past history. That these EMAs have posed very difficult to get through and to hold and stuff, right? So with that, being in the day trade, taking my profit, I'm okay with scaling out there. And then look at the reversal that's taken place off of the 200 moving average for today. You're playing daily contracts. Obviously, if you're short here, and you've taken this trade, even if you just got short a little late, 414 to where we're presently sitting now is $1.80 move roughly, right? So it's a great trade. So definitely add them to your chart. Get used to messing with them, especially on the higher time frames like the daily, the 1 hour, even the weekly, the hourly chart, 30-minute chart. Watch how they respect, even the 15-minute chart. Watch how they're respected very well. I'm not telling you to take a trade solely based off of this, but they do provide quite a bit of context to your current trading strategy, and they'll probably give you some sort of an idea of where you should probably exit your trade or look to exit your trade, maybe targeting, especially on the daily time frame, like I showed you guys a little while ago. Definitely very, very, very stout moving averages. It's obviously it's widely considered too that if we're above 200 moving averages, we're in a bullish uptrend, and then long term, and then conversely, if we're beneath them, we're obviously in a bear trend or a market sell off. So definitely powerful. I would advise that you use them. I'm not saying to build an entire strategy around them, but definitely add them to your charts on the higher time frames, and I'm quite sure you'll begin to pick up some analysis based off of it and be able to make some money. All right. Thank you guys.